You followed structure, you saw the break. So you entered, but price flipped and took you out. This is the exact move, pound US dollar, 30-minute chart. It breaks the low, looks clean, but it's a trap. Most traders get in here. I waited for that low to sweep, then dropped to the 5-minute, watched the shift, and got in after the imbalance confirmed it. I used to jump in the moment structure looked clean, only to get wiped out by the final sweep. Once I started waiting, letting the liquidity clear, then using imbalance to confirm the entry, everything changed. Now I don't guess, I react with structure with precision. If you understand structure but still feel stuck when it's time to actually place trades, this is where everything clicks. You'll finally fix the missing half of your trading system, the part that turns smart money setups into real, confident trades. No more hesitation, no more late entries. Once you see this, your charts will never look the same again. Hit the link in the description to get started. This is where confident execution begins. Let me break down exactly why this pound US dollar trade worked. This wasn't about being early. It was about trusting the sweep, then reacting with precision. I'll walk you through the 30-minute trap, how imbalance confirmed the reversal, and why this kind of entry is invisible to most people. Let's go to the chart. So I know many of you have been waiting for videos like this so you can see the full breakdown that I go through, what my students go through when you're understanding to read price on the chart correctly. So what we're going to do is go through this entry I've taken today on the pound US dollar so you can see how I've gone through multiple time frames using the larger picture as well, not just the lower time frames, so you can see exactly the process we go through. Now the first thing I understand is that we're looking at a daily time frame here to be potentially bullish. The market broke structure to the upside and we've been bouncing off this week high on the daily for some time, and we're looking ready for price to continue up to break through this structure and continue towards a monthly supply above. So we are bullish on a daily time frame. There's still a chance we could see price want to fall back deeper into the demand below, taking liquidity this low here in the market. When we go over to the 4-hour time frame, the 4-hour time frame shows us a very similar picture. We are bullish with structure. We've come off an area of demand. We ran and swept the high. Then we made a pullback to take some more liquidity on this trend line. Let me just show you what I'm talking about. We have a trend line right here of liquidity. It took all liquidity below that area, and now we're running back for that week high again. So again, we're looking for price to run through the week high to continue to break structure for continuation move. Now down to a 30-minute time frame. You'll see on a 30-minute time frame, we actually shifted bullish, continued bullish, where we touched into that 4-hour week high and we pulled all the way back into this previous low. Now this low is what we class as a strong low in the market. What do we have below a strong low? We have liquidity sitting below this low. We have people who've bought from this low, placed our stops below this low. It's a protected area, expect price to hold. It doesn't. It wicks through, it takes all those stops. You may be looking to buy, okay, out of the area of demand here. You get taken out as price pushes through. Now we see a big reaction as we close back up on that candlestick, showing me that liquidity is being taken. We close back above this low on a 30-minute into an imbalance below, picking up those leftover orders within this area of imbalance. Again, it's like a liquidity area in the market, these gaps. And now we see a reaction and we continue to go higher. Now, one of the main things here, which is great for this trade, is that we've closed through this previous imbalance here to the downside. This tells me we should continue now up to run towards this previous 30-minute high. This is a 30-minute high and a 4-hour week high. So I'm looking for this to get run today for a potential profit in the market. So that is the top-down analysis. It's important whenever you're looking at your trades, you do this top-down analysis. So when you do pull the trigger, you have the confidence behind you, you're backed with the higher time frames and your analysis. Now popping down to the 5-minute time frame. This is where the magic begins, where we look for that entry. And like I said, this was showing that structure was all set up. We saw the liquidity sweep below the 30-minute time frame into an area of imbalance. And you can see that here on a 5-minute. Now, many of you may be looking at this saying we're very bearish on a 5-minute. We should be selling. And that is where many of you get caught in the trap of thinking because price is bearish, you're going to continue to sell. And that's not what you should be doing. You need to be looking at your higher time frame perspective, understanding that we are bullish on a 30-minute. Yes, in structure, we're still bearish at that point on a 5-minute until we broke this previous high here, and now we're back bullish. But we can still look to capitalize from this, understanding that the 30-minute was a sweep. We then pushed up here on a 5-minute. I'll go through exactly the entry here so you can understand this yourself and how you can learn this inside that 90-day fix program. So we have price pushing up here with these two strong candles, and we push through this last bearish move. We then move sideways. We have a leftover imbalance here where this candle pushes below into that area, and we close as a nice bullish outside candle. That is the trigger for me to enter on a break of the high of that candle. My stops at the low, and we get triggered on the very next candle. And you can see prices be going up ever since. Now the idea is to target this previous 30-minute high. I have two positions open. I'll be looking to go for this high to start with, and then looking to hold the trade to capitalize on more potential profit. Now I'm risk free on this trade, so even if price comes back now to stop me out, I have nothing to lose on this trade either. It's all about having good risk and money management. So remember, the key thing is, before we wrap up, if you're tired of second guessing trades or stuck wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description to secure your priority pass and start mastering smart money structure today. You need to understand you need to do that top-down analysis. Go through each time frame, and again, you need to go from the higher time frames to know where you are. Like I said, in the daily time frame, there's still a chance that we could run lower on the daily yet, and we could still see this. But what we're doing is we're going with the current situation that we're seeing on the 30-minute, sweeping a strong low, continue up potentially for the 30-minute week high and a 4-hour and daily week high as well. So up here we have a lot of liquidity where we can run through this area to take all the liquidity out. Now if we just shrink back on this 5-minute, you see we've done this once before and the market plummeted to the downside. Since then we've started to see the reaction back to the upside, and we're looking now forward to take out this previous high overhead to the left where we saw the previous push through, and that was a sweep on the 4-hour time frame. It's understanding your higher time frames as well where we're seeing these sweeps. If we didn't see this sweep occur on the 30-minute, the 5-minute entry would have been an entry to take in the first place. So again here, the big wick to the upside, taking liquidity above these highs, and then we run to downside. So once you start capitalizing on this, your trades, your entries are going to show a much profitable outcome. Now, of course, you want to take trading even further. I do suggest checking out the video coming up, which goes through how you combine two time frames to help you to identify potential trades, just like you've seen that I've taken here today with the use of multiple time frames.